a sense of capital. Aloha, ladies and gents. Welcome back to a new episode of A Sense of Capital Life Earnings. Your host of today, as always, is Julian, and I'm very glad to have all of you in. Guys, I was already talking 2 minutes to myself because I forgot to basically press the button go live in my recording software, and that's the reason why you missed my first introduction. But however, I repeat it now again. Guys, don't get confused. At the beginning I have my in-ear headphones on because I want to check how the audio quality of the stream is going, and hopefully it's fine. Oh yeah, and it looks good, so I can already very happy, man. I didn't even expect it. I had hard struggle a moment ago and did a few test runs, but I think it was worth it, yeah, because it's actually working. So before we jump in, we cover the results of Grab Holdings, a company out of Southeast Asia. I, as always, want to address a quick disclaimer to you guys that in the upcoming minutes that will not be financial advice, consultation whatsoever, and there's no guarantee for correctness of the provided data. So guys, make always sure to do your own research, due diligence, and make your own decisions, because at the end, it's your own money and your own destiny you need to live with, resulting out of the results. Is it 8? Adrian, IP, thank you very much for joining. Yeah. I mean, it's not 8. It's not 8 in Eastern time in the US. It's, I think, at the moment 9 p.m. But the results are already live, actually. And I already entered them in my tool and evaluated them superficially. And we will go through them in a moment. But first, just a few words to the company, to the first company of this earnings season, at least for me, which I will back live together with you here through this YouTube account. And the company we will cover today, it's called Grab. Oh, that's the results already. I don't want to spoil, but you can see it here, Grab. And what is Grab doing? Basically, it's a bit like a blend out of Uber and a little bit PayPal or new, like a banking business, payment business, deliveries, you can see it here, mobility services, financial services, and even further services. They always add new ones to their portfolio and always keep developing. Yeah, and I mean, all of this is going through a super app. Yeah, so they're going for the super app approach. You just need one device, one solution on your smartphone to address different kind of solutions and services. And basically that is what Grab doing. Yeah. You can see they have even like Amazon Prime, so for their VIP members, let's say like this, who pay a fixed fee depending on the region where you are located at, for this Prime membership, and then you get special royalties, conditions, discount on deliveries, on your mobility services when you go for a ride, or even when you purchase food through one of their grocery stores. Yeah, so there are definitely the synergies between the different business lines existing, which I have mentioned before. And where are they active? And guys, don't worry, I will talk now hours about this company, because very likely, if you know my YouTube channel, you know Grab, you know that it's all about results and not that much about adding basic color to the companies we are backing in. However, this is, it's not 100% up to date. I think it's the investor presentation slide deck from, you can see it here, 2022, so already 3 years old. But however, they're still active in 8 Southeast Asian countries. Main markets are for sure Singapore, Malaysia, and I think Indonesia. And Indonesia, as you very likely know, the by far largest market over there. Meanwhile, likely covering more than 500 cities. And yeah, that's what they're doing. They have very unique market positioning. What we can see as well when we take a look here at their market presence, at their market share. This as well is already 3 years old, as you can see here, but I assume that if it has changed in the past 3 years, more to the positive than to the negative side. And you can see most of the markets, they cover at least 50% market share. A little bit exception is Vietnam and Indonesia, but here it's still roughly 50%. So yeah, very, very strong. Yes, there's competition, especially with Gojek in Indonesia. But it seems like they get traction, they get very aggressive, and we will talk about this in a moment. Yeah, price chart maybe, you can see, I already wanted to state that it's stable in the past month, but actually that's not the case. You can see the price raised by roughly 60% compared, or let's say on the past 12 months. And oh, you can see already aftermarket, the price is down, yeah, which I can already spoil right now. I can't relate to this price development, but of course it's always about expectations by the market participants compared to the results, yeah. And however, I think now it's time to talk about the results. I kept it like I always do it, and I let me show it to you. Raj Patel, I hope I pronounced it correctly. If not, don't take it personally, please. I think we already achieved a beat on earnings, if I'm not mistaken. Again, make always sure the data, the information I'm communicating is correct. But as you can see, the results are already live. Since roughly 15 minutes, and I already entered them in an Excel sheet, which we check in a moment. Here are the results. We go later through the detailed, how many are those? 4 special slides, what they always add to the presentation afterwards. This is the right one, right? Yeah, Q2 earnings, here we go. And yeah, we have here as well the press release. So I would say we should not waste any time, and I will start sharing my Excel sheet. And as you can see, I mean, it's the regular structure which I use for all the streams, more or less, adjusting it based on the specific services and identity, let's say, like this DNA of the company we are backing. And so we start with top and bottom line growth. Top line growth, revenue. Bottom line growth is earnings per share or profit. You can see here the results for Q1 and Q2 of 2025. Here the results of 1 year ago results, so Q1 and Q2 2024. And revenue actually was 819 million US dollars. Just to prove it very quickly, but I will not do this all the time. But you can see it. I'm not talking bullshit in this regard. Here we have the 819 million. So I straight copied them out, and yeah, you can see it, and it's getting displayed right now here. So the forecast, actually, the expectations by the market have been roughly 813 million US dollars. The result is 819, so a small beat by roughly 6 million US dollars. Not that much, actually, not really essential, crucial, has a certain weight in it. I honestly expected something like 820 million. I mean, when you compare it to past year, they actually produced a miss by 11 million, which is kind of catastrophic, but it was the case. And the quarter-over-quarter development was just 11 million. You can see now it's more than four times of this, yeah, with 46 million, and definitely a beat, yeah. So actually here, I'm a bit jumping through. When I rate it, and the guys, I always give immediately a rating about the stuff I'm talking about, and I have negative, neutral, and positive rating, like the traffic light colors. Keep it very simple, guys. And here, I mean, I'm a little bit between neutral and positive rating. You need to know, when I rate something neutral, I have always high expectations for my companies, and you can see I expected definitely higher beat than the forecast, than the outlook. And if they meet my expectations, which are already a bit higher, but that's the reason why I'm invested in those companies, then it's just neutral. It might be even still actually very good. The company is still performing very well, but not outperforming my expectations. Let's say it like this. And if they do it, they make it happen. Then I grant a positive rating. And here you can see I expected 820 million. They more or less just covered it. So for me, it's a neutral rating, not really crazy, outstanding or whatsoever. But again, definitely a record quarter, very solid results, especially when you compare Q2 2024 results with it, and definitely the first beat. Now we go on and taking a look at the bottom line, at the earnings per share, and hopefully I calculated correctly, because it would not be the first time that I miscalculated. But what I actually used is the profit of the period and the weighted average shares which are outstanding on a diluted base, and you can see the result is roughly $0.05. I added it. Forecast was $0.01, so it is a very strong beat actually. And a lot of times, maybe we can check together the history when we talk about the earnings per share. You can check one more time as well the current price. Not sure if it's 100% up to date. Let's give it a moment. But however, you can see that a lot of times they just covered expectations, was not a strong beat or really just a weak one like the past quarter. And if I'm not mistaken, and yes, the price is now, it seems like up finally. It was down at the beginning by roughly minus 1%. It seems like they beat it, if my calculation is correctly. So actually very strong. So it seems like there's really some profitable surprise going on, almost, if you want to state it like this. And wait, what I'm doing to color it here, but for sure a positive one. Is the right color? This one. So far so good, very good results. You need to know that only one time in the past 1.5 years I granted a green rating, a positive rating for the earnings, and always other than that yellow or negative one. So granting right now already a yellow and the green one on the top and bottom line growth. It was definitely a double beat, as you mentioned, Raj Patel, here in the chat function. Very nice that you're using it. That's the reason why it's existing. But so far, very good. I always prefer revenue that it's over our earnings per share, because I'm invested in this company because of revenue growth, not because of profit growth. But it's still great that they can show and demonstrate they can make it happen, and positive development is going on. And again, I was already going for almost green, because the results, absolute record year, and very strong compared to the year ago, or to the quarter 1 year ago. But so far very solid, very good. And now we jump a bit more into the details, as you can see here, guys. And we start with the revenue, how it is structured. It's not that I rate something here in terms of revenue because I give it already, but just that you have seen it, where it comes from, why it increased that heavily. Because you can see here, overall year-on-year increased by 23%, and you can see it already in the title of this. Oh wait, a little bit more right here. You can see it, the year-on-year development with 23.4%, and you can see it in the title of this stream, and it was already kind of expected by the market that, of course, the relatively weaker getting US dollar compared to the local currencies Grab is making money with in Southeast Asia is definitely granting some kind of support, some kind of tailwind to the overall results. And you can see this very simply. I mean, in the past quarters it was always the opposite way, and you can see it when you take a look at their first informative slide here. And you can see revenues 23% year on year, but actually without this considering the currency exchange effects, it's just 19%. 19% is still amazing. It's very, very solid, and I think higher than expected. But of course, with the US dollar tailwind, you can see here very, very strong results actually. Very, very strong. So no doubt about this. That's nice to see. Okay, let's go on and grant further ratings, and we start with the GMV. GMV stands for gross merchandise value, and basically that's the overall volume of money which goes through the different service lines, and departments through the app. So if people in the past quarter ordered deliveries, let's say here, people in the past quarter ordered deliveries for roughly 3.5 billion US dollars. And the same here with mobility, with not with ride sharing, but with ride hailing basically. Yes, and what we can see here, we take a look at both together. It's called on-demand GMV. So that's the difference to revenue. I mean, let's say you can see here on-demand GMV was roughly 5.4 billion US dollars, but revenue only 818 million. What means that is basically the percentage they take out as a fee for their services which they grant to the people who are ordering food, to the restaurants, to the merchants. This is how it works. That's the revenue and that's the GMV. And when we take a look here, again, very, very strong. Not just the GMV the revenue is developing great, of course, stronger than the GMV, but still very, very nice. It's an acceleration compared to the quarter 1 year ago. You can see Q1 2025 year-on-year growth was 16.3%, still quite solid, but now we have 20.7%. So that's basically a re-acceleration. Couldn't be better from my point of view, and makes it very, very easy for me, a positive rating. Now we take a look about this GMV take rate, and you can see, okay, it's a weighted, kind of looking complicated calculation, but actually it's quite simple. As I mentioned, that is the revenue resulting out of the GMV, and is basically the fee for the customers, if you want to state it like this, for the services and which is provided by the super app of Crep. And that is what is called the take rate, and you can see here on-demand GMV take rate, and it's 13.7%. On the first glance you can see it's lower than the past quarter, but sometimes there's kind of a seasonality, and more important is that it's somehow growing. You can see past quarter year on year it grew by almost no percent, 0.1%, and again 0.1%. And it is lower than past quarter, So yes, it was already lower in the past quarters. You can see it was one time 30.6%, but all other than that, it was higher. So I rate it negative, but you need to see it as this. They turn it down if so the service is getting cheaper for the users of the app, and so then by doing this, they're increasing the amount of their services through the app and maybe catching market share to competitors, and you need to know that even though they have approximately 50% in more or less all of the markets, at least when we talk about food delivery, but still competition is tough, and there's always the risk for new players and whatsoever, and very likely, I mean, it's sometimes a bit difficult as a provider of mobility and food delivery services to differentiate your services to others. It's not like you buy a computer and it's clear that the computer from this company is better than the PC from the other. That's not that clear in this case. So price definitely matters. It's a price sensitive business, at least as long as you don't have really the largest share which is available of the market. And I assume that's the reason why they decreased the take rate. However, I want to see a high take rate. I want to see they get comfortable here and are able to basically collect high revenue per customer and high fees, and that wasn't the case in the past 3 months. Raj Patel, you're asking, so what do we think tomorrow is grabbing up or down? Again, it always depends on the expectations by the investors, and I think the expectations have been already high. That's the reason why the price increased in the past quarters. I mean, it was again more or less clear that because of the weaker getting US dollar, results will be likely good, and the commercial agreements between US and Southeast Asian markets have been somehow fixated. So there are a lot of macroeconomical aspects are positive for the overall business, and the business itself, I think, goes well too. I mean, touristic business is going on, which is good, going well, which is good for instance, especially the mobility services. Yeah, so there was already good expectations and high expectations existing, and if it goes up or down, hard to tell. Yeah, but I can tell you, I mean, I'm not done yet with the results, but I already screened them superficially, and I know from my perspective they are very, very solid. Just my opinion about them, and I expect because of this results will go up. Yeah, because again, in general, I think tomorrow it's not that unlikely because as well of today's very good earnings results of the US companies. I think maybe they will use this backup by them, and the overall market might go positive. I expect at least. If not, it is how it is. You never know. And Grab has good results so far. Market looks good. Why not going up? And yeah, as Arun Nair, I hope I pronounce your name correctly, colleague. But as you mentioned, technically it should go up since it is a double beat. Yeah, and I see it the same way. And again, it's not just top and bottom line growth, double beat. When we take now a little bit dig deeper into the results, you will see there are a lot of diamonds you can find, from my perspective at least. So let's go back. Even though that was negative, again, it's an investment to the future in terms of their positioning in the market, and sometimes you need to do what you need to do. What we have here now is the monthly transactional users, so basically they're active users. Yeah, a very, very important number, because yes, you can play a lot with take rates and this and that and offer new services, but if your customer base is small and weak, not financially strong, for instance, or not reliable, not active, it's not worth anything. Yeah, and you can see it's way, way higher than past quarter, and that is actually not that strongly proven by the numbers, because you can see past quarter year-on-year growth was roughly 16%, now only 13%, so it decreased actually. Maybe past quarter was a very strong quarter, yeah, we should not forget this. And again, that's an all-time high by far, but it's not like the customer count, the active customer count grew like crazy, yeah, that is not the case. But still, it's not bad, you know, it's 1.5 million roughly more users, actually quite strong. Difficult one. However, I need to be strict here. I'm quite satisfied with the result, but you can definitely see here the results. They now making more money out of every user. This is what we will see here in a moment. But the user base itself could develop better actually. Yeah, and that's the reason why Quanti as well a negative rating. But guys, no need for panic right now. I'm quite sure more positive numbers will follow. And here we are, on-demand GMV per MTU. So basically we combine right now the gross merchandise value, what we have here resulting out of the deliveries and mobility services, with the number of the active users of Grab. And you can see here, that looks a bit more solid, definitely the highest number in the past 8 quarters. And you can see past quarter, just a tiny raise by 0.6%, now almost 7%, more than 10 times the number. Year-on-year development, very strong from my perspective. So really, it seems like they starting to utilize the customer base, mobilizing them, and getting some value out of them, and that is nice to see. Yeah, I mean, it was always the question when they will start doing this. Yeah, when they feel ready for it, and how customers of them adapting to their services, and it seems like they're doing it very well. But we need to figure out as well later on if it's a profitable execution, or is it just some bought stuff, let's say it like this, by lower take rates, for instance. Yeah. However, first we start and talk about the rising star, more or less one of the major reasons why I'm invested in Grab. If this new business, the financial business, so full banking business, full payment business, yeah, a banking license in Singapore, in Malaysia, in Indonesia, as a super bank, GXS bank. If that kind of stuff wouldn't exist, I would not be invested very likely, yeah. But it's existing, it will rise very likely, and they got it very strongly in their hands how good it will raise. So we start with the loan portfolio. So basically the money they are providing their banking users, and we can see here definitely an all-time high. And let's see how it developed. And you can see past quarter 56% year-on-year growth, looks very strong. But again, keep in mind, we're talking about a low absolute base, a low fundament, a very new fundament. I think this banking business is old, like 1.5 years. So we are in the 2nd year. So you can very easily achieve high relative growth numbers. But still nice to see it's accelerating. It's accelerating very strongly. That's really lovely for me to see. That's really lovely for me to see. I really need to tell this. That is exactly what I want to see. If I would recognize that the financial services somehow confronted with challenges they might not overcome successfully, I would start to creating doubts basically and concerns. But that gives me confidence in this company and as well in the future of this company, even though of course they have their core mobility and delivery services. But here we talk about the loan portfolio per MTU. It's a KPI what I created by myself. Not 100% sure if it makes sense or not. But again, at least we have the MTU number, so the number of these active users, and I put it in a ratio to the loan portfolio. And you can see it here again, a very juicy growth. Already past quarter, year-on-year, 35%, now 58%. So it shows one thing is that they're granting more money to their users. They're getting more active here and utilizing their banking customer base. But on the other hand, their users are going for it. Yeah, they're creating demand and utilizing it, and this is how it should be when you start a banking business. So again, very strong and definitely a positive number. Guys, later on I will check out what is going on with the comment section, but I will now try to quickly go through it, and when I'm done with this Excel sheet, then I will check the check function and what you have left here as comments. Now we're talking about the bank deposits, so basically kind of a sign of trust, how the bank customers are trusting Grab, how they're depositing their personal money at the accounts which they're using, provided by Grab. And you can see here, looks solid as well on the first glance, but actually not that strong year-on-year growth. Yes, first glance, 110% year-on-year growth looks solid, but again, compared to the quarter before, year-on-year growth, it was almost 200%, now only 110%. Yes, of course, keeping this kind of level of momentum is difficult, but still, when you take a look at the absolute numbers, for instance, last quarter to this quarter, it was up $100 million. and it was 230 million US dollars, and now roughly 110 million, so roughly 50%. Not that great, not that great. It was definitely higher in the past, these jumps quarter over quarter, at least at some of them, and that is not convincing me that much. So in this case, I granted a negative rating. I need to be strict here. But now let's take a look at bank deposits per user, and this looks already a bit better, but let's see. And here unfortunately we have the same issue, 87% year-on-year growth, not that bad, but again compared to the quarter ago, Q1 2025 to Q1 2024 growth, it was 159% to now 87%, so really getting very strong down, and very hard for me to catch what is the reason for it. As you know, very likely banking business is very hard to catch. I mean, I'm invested as well since more than, I'm now in the third year of being invested in new bank, digital bank from Brazil. I will cover this as well on the 14th of August here on this channel. But even after all this time, it's definitely difficult for me to catch all these numbers in the banking business. And I think you can play when you are experienced with it very well with the numbers as a staff member who's designing the earnings results for these businesses, and here it's the same. So it's hard for me to catch why that is the case. However, even though it's an all-time high, again the jump is not high, and the year-on-year growth, yes, 87% sounds promising, but for me the Greece is a bit too strong, yeah. But let's go on. They always actually, when you check out their press release and you search for advertisers, they covering a full page. Wait, I can share it with you guys. They're covering a full page, or a half page, actually, I think. Let me see. Advertisers. A half page. 4 big bullet points about the advertisement business, or at least part of it. They're stating a lot of numbers to it, and it seems like, in the past they had 4 major pillars of income: deliveries, mobility, financials, and actually advertisement. And then they decided, okay, we spray it, we address it to each of the different silos. So there's advertisement going on in the banking business, advertisement going on in the deliveries, and advertisement business going on in the mobility business. And so it's not already anymore displayed separately, but they're adding some comments to it. And those comments I utilized, added them into my sheet, and you can see it here. Monthly and it seems like the advertisement business is growing very strongly, and this is something what we definitely need to screen and consider, because when you, for instance, take a look at Amazon, they are a big advertisement company, and this just raised in the past years, not that long ago, and now it's one of the best income sources for them. What they have actually, and so with Grab and the super app and the loyal customer base of 46 million users, which are active and using their different kind of services and synergies, of course they can make money with advertisement. For instance, ask the restaurants, the merchants, if they want to position their food or their location very high when someone is searching for whatever, pasta, noodle food, whatsoever, then you can pay money as a merchant to that you're getting displayed more on the top ranked level, And this is, for instance, this kind of advertising business what we can see here. So let's check out what's going on with the monthly active advertisers. And it was past quarter 60% year-on-year growth, now 31%. So doesn't seem to be that much, but you need to really consider that 1 year ago, Q1 2024, it was really low with 120,000, and then it made already a big jump to 170,000, so more or less 50% up. And that's the reason why year-on-year growth doesn't look that well, but actually it's quite solid. It's 30,000 more active users, and that is nice to see. And if the year-on-year growth is not kind of a beat, I can't grant it a positive rating. but in this case, at least I'm confident to grant it a negative rating. Yeah, so that's okay for me in this regard. But let's check out what is the average spend by monthly active advertisers year-on-year growth. And they don't give a specific number how much money they make with the advertisement business. But you can see is that somehow I think the advertisement is working well, because people, the users, the customers, they're utilizing it more and more. Yeah, the super app to basically in the channels who are integrated in it to start promoting their stuff. And you can see past quarter it was actually negative year-on-year growth by negative 24%, and now it's up 16% year-on-year. So it's nice. It's getting reutilized. It's not the best number out of all the past quarters, but again, it is strong, and with 42%, no doubt about it. I mean, keep in mind we have revenue growth strong, we have the legacy business, the on-demand GMV business, so deliveries, mobility strong, the loan stuff is growing as hell, and then we have still the advertisement business, and that is nice to see. That's a nice goodie, and something what you definitely need to keep in mind when you are invested in Grab, that this is a kind of a business. There's one big rising star like the financial business, but in the background all this kind of engine wheels in terms of average of advertisement in all different departments are existing and might create a lot of value on the long play. Okay guys, let's go on and let's check out what is going on with incentives. What are incentives? Basically, these are discounts, special offers, bonuses. What, for instance, you get when you order a ride from A to B, for a special daytimes or whatsoever, to attract more customers and from the perspective of Grab, but as well to stay more competitive and make their services a little bit more juicy compared to the ones of the competitors. You can see here how the incentives develop, but for me just important is the overall on-demand incentive share based on the overall on-demand GMV. Because it's not a problem if they're granting more bonuses, it's just important that GMV is at least covering on the same level, growing on the same level, so it's not getting out of control. And you can see here it's 10.1%. Past quarter it increased by 0.4%, this quarter by 0%, and in this case lower than is better, because we want to have low incentives which needs to get granted by Grab to achieve all these nice targets what we talked about moments ago. And it seems like 10.1% is solid, and again it didn't grow. I mean, I'm already close to it to grant it the positive rating here, but because it was not the all-time low, it didn't decrease, actually I keep it on 10%, I keep it on neutral. That's okay. Now another topic when we talk about investor orientation, basically shareholder orientation, and that is the stock-based compensation and stock-based compensation share. And actually I know it already, that is very nice to see. I mean, it decreased already past quarter with 4% year on year, and now with 5%. Very nice to see. You can see, I mean, stock-based compensation was 11%, 10, 14, and then it went up to single-digit number, down to single-digit numbers again, up past quarter, but now 7.3%. Very nice to see, very lovely, especially when you compare it to Q2 2024. It's roughly again 5% down. Very nice. That looks like they are not that highly anymore, depending. I mean, you don't know how it will develop in the future, and it somehow gets a reset and it's going up again. Might be the case, but for right now it seems like really the internal sources of cash flow, of income, starting to work. This flywheel starts to work, and they are not relying that heavily anymore on shareholders, or let's say on stock-based compensation. So basically granting new shares, new stocks, new shares to the market, and diluting basically the shares of investors like you and me. Yes, and now check what is going on with the free cash flow, the adjusted free cash flow to be specific. And actually that is a bomb. That is a bomb, guys. I mean, past quarter year-on-year growth was 3%, so almost nothing. And now 180%. I mean, look at this, negative 6 million. I mean, I need to double check it if the numbers are right. And guys, do it by yourself if you like it. Again, it's important that you know what you're doing and check by yourself as well. The reports, I can only be supportive a bit here and share my opinion. But at the end, it's your part, your job of the business. However, but you can see minus 6 million, minus 100 almost, 40, 140. 140 actually is excellent. But it was, maybe it was a stronger seasonal quarter, whatever. Then we have 61, we have minus 100 past quarter, and now we have 112. I mean, especially when you compare it, again, it's 180% growth. Yeah, past 1 year ago, Q2 24, it was 40 million. Now we're talking about 110 million, more than 110 million, just free cash flow. Crazy strong. This is money you can work with, yeah. You can, whatever, buy back shares or whatever you like to do with this kind of cash. Very nice to see. And now we have here the adjusted free cash flow margin. So basically we put this in ratio to revenue. Want to see how efficient they are. And obviously, I mean, this will not be bad if the other stuff is good. You can see past quarter it developed already positive by roughly 2%, which is very solid actually. And now by almost 8%, yeah. And it's again not the highest one. We had really a very, very good quarter, Q3 2024, as you can see here with 19.3%, but still roughly 14%, especially when you compare it with the negative 13% of the past quarter. That is nice. That is nice. That is really delicious, attractive, I can say. Nice to see, nice to see. And now what we do, I mean, let's say first of all, we have here a yellow to green grading neutral one, and we have here we have a lot of green actually. We have a bit of red. But it's most important, I mean, on the GMV is developing amazing. That is really nice to see. That's important. We see that at least the loan portfolio is developing great. Overall banking business is neutral. So we have here as well, I mean, overall you can see, I think we have a neutral rating with a positive touch, and we have as well here top and bottom line neutral rating with a positive touch. Now we check out what is going on with the outlook, with the guidance granted by Grab. Sultan, you just asked the question because by accident I've seen it. No, I will not stream the Grab call. I think it will start in 9 minutes, but I never guide the streams because at the end I can't add that much value and I will listen by myself. But honestly, it's quite late in Germany. It's almost 2 a.m. in the morning. So I will, after this, going to bed, and very likely tomorrow and the weekend read the transcript and check the details. I think management, the CFO and CEO of Grab always backing the company very well and providing good information, good insights. I think they are very professional actually, and I think yes, it's actually worth to check the stream in a moment by them, the call, or maybe even read the transcript like I'm doing it. Oh man, Sultan, where are you located? Sultan sounds so like Turkey, but I have actually no clue. But crazy that you're still awake. Respect, man. I maybe I'm not sure what I'm even telling here because my brain is almost rotting and not working anymore. However, let's go on. Let's go through so all of us we can jump into the bed, not that far away in the future. We need to check the outlook actually. I didn't check it in advance. And let's see what they stated. Revenue outlook, you can see unchanged, yeah, on the first glance. So when we go back to the Excel sheet, we have it here. That's the same data. I always use the mid number. Oh, Saudi Arabia, nice. Currently, esports championship, or how you call it, is going on, I think, in Riyadh. Nice to see, man. And impressive, I can say. However, yeah, so this one here, you can see they're calculating currently with a 2025 year-on-year growth of roughly 20.5%, and the adjusted EBITDA year-on-year growth of 50%. The outlook, the guidance basically remained untouched, so we color this neutral. So now basically we rated already everything when we talk really about hard facts. And of course, like incentives, like take rates, all of this, these numbers, they're telling stories, and we talked about the stories. But let's go again through it. We have here, again, a very solid revenue result, but I still take it as neutral because it's not really crashing my expectations that positively. But earnings per share, if I calculate it correctly, let me check one more time if I can see it quickly, if that's the case. Check quickly the news if there's already something live. No, doesn't seem that this is the case. However, top line growth neutral, bottom line growth very greenish if I calculated it correctly, a very strong beat. This overall is at least neutral, but I would say neutral with a positive touch for sure. Yeah, that is great. That's definitely over average when we talk about my experience with Grab and their earnings results. And then again, we have all these details here. On demand GMV, a very important number when we talk about the core business of them, deliveries and mobility. Very solid, very strong, re-accelerating. Take rate getting down, but might be the case that they just want to be a bit more competitive. Actually, MTU is really, when we talk about all this red rated KPIs, monthly transactional users, is for me the KPI which is most negative. Yeah, I want to see that the customer base is growing. I mean, we talk about a lot of people in Southeast Asia. I don't need to check it. Wait, let me check this quickly. 0.7 million citizens. Yeah, so I want to see there's potential left, guys. Yeah, it's a little bit more like 5% or what. So I definitely want to see that developing stronger. I hope this will be the case. So that is definitely not that nice. However, a lot of nice green stuff going on here. Advertisement is developing very strong. Financial seems like developing as well, quite strong. And they're getting more shareholder orientated, and the free cash flow is amazing. An absolute top-notch result from my perspective. So overall, really like, it's again a green to yellow to neutral. And then we have the outlook, the guidance remained untouched, so it's a neutral. I can't give any color, any other color than that to this. And so, I mean, it's very clear. We have here green to neutral, we have here green to neutral, but a little bit more on the green side from my on the neutral side from my perspective. And it's difficult. It's really difficult because that is really almost green, and that is very strong positive to the profit side. Yeah, and those results, some of them are really solid, really solid from my perspective. Yeah, it's a hard catch. Let's do it like this. Yeah, I check quickly the chat, and then we go through these slides, through these 3-4 special slides of the presentation slide deck, and maybe then I grant a rating. Maybe that's a little bit more relaxed for me. Okay, let me check quickly the comments. StyleX guidance has to be good too. Yeah, and that might be a downside. Yeah, I mean, the question is good point, StyleX. And Auner is right that he is confirming this idea, because at the end, you can see they granted very strong revenue and earnings per share results. They have a double beat, a very good beat actually, and still you are wondering, okay, why they are not adjusting their guidance, their outlook? Yeah, why that's not the case? Are they expecting this will just be one exceptional quarter, but Q3 and Q4 will be bad? So how much is it worth if this quarter is great? Yes, nice. Yeah, maybe good for the price right now, but the stock price. But why are they not adjusting their full year guidance because of this? Yeah, what do they see what we can't see? And I think that is something what you need to consider and think about. And what is it worth to have one strong quarter if the management is not expecting that the other quarters will as well outperform? Yeah, and yes, maybe management is sandbagging and not adjusting right now the results. They're a little bit more careful in this regard, but the full year guidance creates concerns in this regard, even though for me it's minor concerns. Results are great and I don't see a reason why this should not stay there. StyleX, you're right. I mean, if they're buying Gojek, it will get crazy. I think so. It will be a complete new area, complete new business, basically how it's working. I think how they will set up their take rates and how they can utilize for advertisement, this kind of stuff. But it's okay. Curtis have writing here to play grab ass. Okay. Okay. More comment I can't add. Then Lance Petrazio is writing, does it come out in 10 minutes or is it already out? It's already live. The results are already live since 1 hour and 10 minutes roughly. It's always, at least the past quarter, it was always 1 hour and 10 minutes before the earnings stream, the earnings call. The results are live. 1 hour and 10 minutes. And Mitch, yes, you're right, the stock is flat. That's the case. Again, you always need to consider the expectations which shareholders, investors had before the earnings went public. And it was very clear because of the currency exchange rate, the results will not be bad. Macroeconomics are good, and so it should be fine. Frosty is asking, are you bearish on Grab? No, not at all. I'm very bullish. Otherwise, I mean, I only cover companies I'm invested in, and I'm only invested in companies I'm bullish in, very bullish actually. And I'm only invested in 5 companies, yeah. And Grab actually is my third favorite company of them. I honestly just own at the moment, just depends what your budget, how your budget is designed. But I just owned shares for 16,500 euros, which is maybe 18,000, 19,000 US dollars, not sure. But I want to push it up to at least 33,000 US dollars, but it doesn't feel cheap for me, this company. But Grab, honestly, from my perspective, is never that cheap. Yeah, it was never. Even when I invested in it first time more than 1.5 years ago at $3 US dollars, from my point of view, it wasn't that cheap for a company in Southeast Asia, yeah, for a emerging market company when you state it like this. But on the other hand, I'm invested for this financial business very strongly, and I'm very strongly invested because of these markets, because of the economy, the population, the people over there, the potential. That's definitely a bet for me on Southeast Asia, and this is why I decided to buy it as well, because I believe in those people over there. Okay, guys, let's share the presentation slide deck a moment, and let's check the details, and then I will grant the final verdict. Again, for those of you who joined late, you can see here the big difference between the revenue, or let's say in general the year-on-year results, and the ones when you consider the currency exchange rate, so US dollars getting weaker. Still the results would be very strong with 19 and 18% for instance here, but for sure weaker than they actually have been. But on the other hand, check out the old results from the past quarters. Most of the time the exchange rates, the currency development was very negative for Grab, and now first time, at least as far as I can remember, positive. Okay, what we have here, financial and operational highlights, mobility flywheel drives virtuous cycle of growth. Yeah, again, for me, MTUs, so monthly transactional users, 16% year-on-year growth, not that strong. Number of mobility transactions, 23%, that is actually strong from my perspective. Active partner supplies looking solid. Average user trip fare, okay. So there's kind of a flywheel, and all of these aspects work hand in hand with it. I mean, Grab always, at least as I understand it, took care of their riders, of their drivers. So the people who are working more or less indirectly for Grab and delivering food or transporting people from A to B. And it seems like it's working well. Now we talk about other numbers, financial and operational highlights, product-led initiatives driving accelerated growth. What kind of? Delivery GMV, adoption of new product initiatives in deliveries continues to gain traction, driving GMV growth that outpaced that of our existing products by 3 times since, let's say, 2 years ago. Okay, great, and that's very likely why they achieved this. Higher on-demand GMV per MTU. Wait, as you can see, guys, I will not cover the call. I never cover calls. Sorry, guys. Feel free to leave. I will check tomorrow the transcript and read it by myself in silence. I think it's hard for me to live add some value. Yeah, so I don't take it negative if you leave now the call. Absolutely fine. Yeah. They beat expectations. Top and bottom line, they beat expectations. But what I wanted to tell is, you can see it here as well. I mean, forecast was 813 million revenue, and they achieved 819 million. And if I calculated it correctly, take care, guys. Expectations in terms of earnings per share was $1, and they achieved $5. If I calculated it correctly, I hope I'm correct. I think I'm correct, but you never know. However, what I actually wanted to address is the on-demand GMV per MTU, and you can see it here, $115 US, by far the largest one in the past 2 years. Re-accelerating growth, as you can see here, 7%, and this is what gets mirrored as well in their presentation slide deck, as you can see here, by this new product, services, options, portfolio, whatsoever. It's going well. Nice to see. So that is actually a reason they are innovative, and they really try to catch the audience with new approaches. Now the almost last slide. Let's go on. Financial and operational highlights, loan portfolio. So we're now talking about the banking business. Loan portfolio to be more than $1 billion at the end of 2025. Yeah, so you can see a big jump. We covered this already as well and rated it positive. Ecosystem lending, higher lending volumes in GXS and GX Bank. So GXS is Singapore and GX Bank is Malaysia. Loan dispersals grew 44% to reach. Yeah, so all of this is going well. I have not that much concerns in terms of the banking business. Yes, the banking deposits, you can see it here, is colored negative, and I'm not sure how I should think about this. I assume there's a reason behind it, and I expect analysts will ask questions in this direction, and management will answer in the upcoming call. So make sure you check it out. But I think it's developing great. So let's go on to the next slide. Financial and operational highlights, advertising drives earnings and ecosystem uplifts. Yeah, and that again, I mentioned it already to you guys. And that is maybe a value if you check out, if you follow the stream here, because not everyone is focusing this kind of stuff that much. But you can see a monthly active advertisers and the average spend and how this developed. It's very strongly, basically, especially the spend per active advertiser. Very nice to see, and this is basically what the slide is here representing. Very nice. You can see a 9 times average return on advertisement spend. Very nice. So it's working what they are doing. Yeah, the advertisement is working. Food ads, you can see it here. Mobility ads, nothing too complicated. They're just using their super app, and people who are already somehow working really with the services of the super app, you can use advertisement. It's not like you're getting AdWords. So you see some promotion stuff. Which is not interesting for you, or which has nothing to do with Grab. That is not the case. That is really product and service specific stuff what they're doing here. That's nice. It's amazing, guys. What we have here, the value creation of shareholders. Yes, I mean incentives going down, or at least are stable. Shareholder dilution is going down. That's for sure the case. It feels like they are disciplined. It feels like really, again, I mean, I think now it's maybe the time to grant a verdict by myself for these results we covered today. And yes, they have a lot of net cash, and I think they get more cash, and maybe, yes, this Gojek acquisition will take place, and it will be crazy. Actually, guys, it will be simply crazy. I mean, when I wanted to invest in this company 1.5 years ago, or I invested actually in it 1.5 years ago, there was the idea to acquire Foodpanda, one of the competitors, holded or owned by Delivery Hero, a German company actually, and went through because of, let's say, competition regulations. But maybe they are now ready for it and have good arguments. We will see. However, yes, it's very solid, and I think now we should come here to this verdict. Yeah, and again, yellow to green, and we have here yellow to green. When we talk about those details over here, this product, company-specific details, and outlook is yellow. So overall, it's yellow to green. Really hard for me to, when you are between something like this, to decide for E for O. But again, it's very difficult in this case, because what I can tell is, for me, it felt a bit like a breakthrough results. Maybe I'm missing some important information, and again, not sure what is going on with the MTU. That's not that nice. What is going on with the bank deposits? That is not that nice. And for me as well, full year guidance, I'm honestly not sure why they're not raising it if the results, if they grant a double beat and a very solid one, yeah, at least in terms of earnings per share, yeah. So adjusted EBITDA, why not adjusting it? Not sure, yeah. So that's a little bit awkward. I can't completely understand this, but still, it seems for me like a breakthrough quarter, because again, a lot of stuff is now heading in the right direction. Again, incentives feeling now stable, what was a lot of times not the case. Stock-based compensation is going lower. So for investors who avoided to invest in Grab because they thought, man, they're burning too much money for incentives, they're just buying their market share, or they're achieving good results, but each share I'm owning right now, 1 year later, is getting diluted by X percentage, and now that's getting lower. You know, that's this shareholder valuation and orientation, it takes place, and that is good for the price. And we are investors. At the end, we want to see that the price is rising, and that is nice to see. And cash flow, people love cash flow. I mean, yes, it's adjusted free cash flow, but good one, a very good one this quarter. Let's see if it goes again in the future negative, or if they can keep it right now positive. We will see. But I can imagine that Q1 again in the next year will be negative, because that's part of the seasonality, as you can see here. But we will see. However, right now free cash flow is heading as well in the right direction. So nice. So there are a lot of really bullish, from my perspective, bullish and very positive and almost breakthrough KPIs. Yeah. Earnings per share, people like this. They have no money to work with. It seems like really, yes, it's a, from my perspective, not cheap company, but it feels like really they switched this button and now starting to make money, basically. Yeah, and yeah, it was for me one of the strongest quarters, and but still there are some question marks. Especially with the MTU, why it's not growing that well. That would be, if that would be something like neutral or green, I would easy give it a positive rating, but 13% year-on-year growth in MTU doesn't look that great from my perspective, honestly. I want definitely to see some more. I look, guys, I keep it as I always keep it. If you are a loyal and reliable viewer of the stream, you know it already. If you are new, you will get used to it. It's my companies I'm invested in, and it's my opinion. And if neutral is still a good rating, yeah, I have high expectations from my companies, and if they achieve neutral, which means I'm happy with them, I will stay invested, yeah. And they didn't disappoint me. And if I stand between two ratings, like in this case, positive and neutral, because again, very solid results here, some of them, but as well some question marks and awkward stuff, not that negative, but it is existing. I stand a bit between, and if I stand between two ratings, a lot of times I go for the more or for a less good rating, and in this case it's neutral. So I grant a neutral rating, but at the same time, what I can tell you, again, I really want to double the size of my position. I want to do this really longer time. I was running out a bit out of cash. Now I have the money, but the price for me is a bit high of Grab. But if the price should tomorrow drop, yeah, because for whatever reason, and if it's just, I will do another valuation calculation with another tool. But if I figure out now, for me, as I mentioned, I define it as a breakthrough quarter. I personally at least do. And if the communication, the information which getting communicated by the management and the earnings call are reasonable and makes sense, and maybe brings a bit light to the MTU situation or the bank deposits, and why they're not adjusting the outlook. If the results are actually quite okay, and still the price should drop, yeah, and that happened a lot of times. Same with at New Bank and Grab, a lot of times at the next day the price drops, even if the results are solid, yeah. But if it drops tomorrow, and even if it drops not that much, but if it drops like 3, 4, 5%, it will never drop like this, I expect. But if it drops, I will not think twice, I think, to purchase further shares. Let's see. Maybe I wake up tomorrow, it's already very late here in Germany. Maybe I wake up tomorrow and I have a total different opinion, but I'm definitely motivated to add more shares, and this results hasn't changed anything in this regard. That's my view on it, even though I granted just the neutral rating, and that was for me important to explain it to you guys. Okay, let me quickly check what are the comments. Jose Lopez stating, I have calls for January 2026 and some short-timed ones for August 8th. Not sure how the market will receive this in the opening tomorrow. I'm not sure either. Let's see what is the live price right now, and then we can check. But again, I think the stock is not cheap. This company is not cheap. That's the issue why I didn't, or that's the reason why I didn't add further shares in the past weeks. And that's maybe the reason why it's only up by 0.57% at the moment, because there have been already some kind of expectations calculated in. Let's see if Seeking Alpha, a platform which I really can recommend for more information about the shares you are invested in, if there is some feedback already on the results, but it's not. Yeah, so we are a little bit quick, we can say. So let me go on and go through the comment section. The Links TV asks, did they beat expectation? Yeah, if I'm not mistaken, revenue for sure, and I think earnings per share as well, very strongly. Yeah, if I didn't mistake it. Where can we see the call? On their investors website, and there is a call. Yes. No, Rob Mason, I never back the live calls. Maybe I would change this because more and more people asking for it. But most of the time when I see this at other YouTubers who backing live calls, they just are silent and watching the call and not adding any value to it for themselves, or for the audience. So for me, it doesn't make that much sense. I cover most of the time the results, and then it's for me fine. But I try to do it on a detailed scale. Him asking, and hims and hers will release their results on Monday, actually, the 4th of August. I will be live as well. Where do you expect Grab to open around tomorrow? I personally have no clue. So, again, my experience is at the day after the earnings results have been released at New and Grab, why whatsoever that is the case, a lot of times they don't make big moves, and would not surprise me if they're not making any strong move. For me, the results are positive, especially if the management might add some valuable color to it, valuable information to the question marks which still exist. For me, at least a few. But what I see and what I understand looks very positive from my perspective. And I would personally think that if it was not everything priced in before the results, the stock will raise like 2 or 3%. But on the other hand, you need to consider Grab is really not a cheap stock from my perspective. It's not a cheap stock just by fundamentals, and it's not like a SaaS company, which has always secured income like cybersecurity companies or CRM companies like Salesforce or whatsoever. That's not the business case. It can be very volatile. It can be very cyclical, the business over here. So, and for me, price is not cheap for Grab. That is all I can say. And they must perform. They must perform. And now you can see it in the background. It's 0.76% up, positive. And it would not surprise me. It's completely depending on how the market develops tomorrow. If we have tomorrow a strong market and a lot of companies go up, and I expect this will be the case because how Meta, how Canva, how Microsoft, how eBay, how all of them perform today. Not everyone like Broadcom, I think, but a lot of them provided good results today. And I assume market tomorrow will go up. That's my expectation. Then I assume Grab will be as well green. If it is up to me, I hope it's going red and I can purchase more shares. I never say this, something like this. Really, you will never hear this. I'm not this type of person, but in this case, really, I'm waiting to add shares quite some time, and now again I have this financial power, but I'm not happy with the valuation. Let's see if that changed. Maybe I calculate tomorrow based on the new results, the valuation, it looks better, but we will see. Stanley Nastarai, you writing I had average 3.2, I think entry price, $3.2 US. I doubled after due diligence at 4.9 US 2 months ago. Yeah, nice move. Really nice move. Yeah. I mean, I see that we come back to 4.9 US. Would not surprise me. I mean, the results are not that crazy good that this rocket will now start to fly for months and months or whatsoever. At least I think. I think it's really like a big ship, like a train, and it's really solid making his moves. Making the moves. It's preparing new business like financial business, like advertisement business, the core business, the legacy business with deliveries and mobility is going well. they know what they're doing, they have their market positioning, they have very, very protected and stable there, and maybe then, yes, really it makes like this, and they acquire really Gojek or whoever, who knows, yeah, even it might be not that easy to realize this kind of acquisition in terms of regulations, but who knows. So, and even if this acquisition takes not place, they're doing the stuff, I think, very right, and they're developing. And really, I mean, just check out the numbers of the market, how the GDP will grow, they're expected at least, how it will grow and this kind of stuff. Even if crap is not performing that 100% perfect and executing everything well, just based on the markets, the macroeconomical data, and if that is getting realized, the fundamentals, the conditions, this overall frame of aspects is very positive from my perspective. Yeah, and so therefore I understand that you ask, okay, what is going on tomorrow with the price? But honestly, I can't. It's hard for me to predict it, and it doesn't matter for me. Really, it doesn't matter. I'm not investing into this company to sell it tomorrow, make some money whatsoever. I would just be happy to get it a bit cheaper, just in this specific case. But again, I stay patient, and maybe somehow I wake up and I think I must invest right now or whatsoever. But I don't think that will be the case. I stay patient. Money is still good invested in other companies like HIMS, and that's okay. And guys, actually, when we talk about HIMS, let me quickly share this page. You see here some macro data, but however, more important is this, and that is the earnings season and the companies I will back with my live streams. And as you know, I'm only invested in 5 companies. You can see it here. That is my whole portfolio. That is real money. It's a bit higher right now. Maybe it's now like 190, 200,000 US dollars. But yeah, that's my portfolio. And again, I only back the companies I'm invested in, and I want to stay very close to them and cover them carefully. I don't want to talk about companies just because they are hyped and stream about them. But actually I'm not invested in it. I don't like this kind of stuff. However, you can see we covered now Grab, and now the next earnings live stream will be HIMS and HERS. Upcoming Monday, 4th of August. I think it will be live something like 10 p.m. Central European time. And when we talk about Eastern time, something like 4 p.m. Something like 4 p.m. That will be the time. So feel free to join. It's my biggest position. There's a lot of action going on with this company. A lot of emotions. High short rate with 30% in the red. Crazy stuff. Let's see what will happen tomorrow and on Friday, or even on the day after the earnings results. If some kind of short news will occur, we will see, but will be a crazy earnings call, I'm very sure. Really, I expect some action, and you can feel very don't hesitate to join. Yeah, you're definitely invited, of course. Yeah, and guys, that's it for today. I mean, if you like what you have seen in the past, not sure how long I am live, past 1 hour and 20 minutes, feel free to subscribe to the channel and like the stream. I highly appreciate this. It makes me happy. That's good. Always to make people happy. It would be great if you're doing this. And of course, you can follow me as well on Instagram. And I always update you here with my product, with my portfolio, with the news purchases, or if I sold some companies, some shares, or whatever. So feel free to join. And yeah, guys, that's it for today. Thank you so much for joining. I have you had a pleasant time. And again, disclaimer, that was no financial consultation, advice whatsoever. I'm not the professional one. It's your own money, make your own decisions. But more important, guys, enjoy your life, stay healthy. That's most important. Yeah, I mean, money is not worth anything if you're not healthy. So take care of yourself and enjoy good weather if you have good weather, and if not, enjoy something else. Don't invest all your time in stocks and in the investing. There is something else existing, I think. However, much love and see you next time, hopefully on Monday when the HIMS earnings call stream will be live. Cheers and bye bye. A sense of capital.